So it's really good to have Kelsey in this morning to go through it. So no further ado, over to you, Kelsey.
Thank you, Ollie. Welcome, everyone. I am Kelsey. I live in Halifax, Nova Scotia, Canada. I'm a crazy person because I work with my wife in the same business for 2 decades. And she's a certified financial planner. So our main business is financial planning to entrepreneurs. And I've had 3 exits myself. And I specialize in exit planning, and I'm a certified exit planning advisor. So I have a few slides to go through, take 10, 15 minutes, and then I'll take questions afterwards, if that works for everybody. Screen 2. Everybody can see that? Perfect. So, if it wants to go to the next page, that would be a lot better. Come on, little fella, you want to go? There you go. So, disclaimer. As you've probably seen lots of these, this is not financial advice. This is not investment advice. This is not tax legal advice. This is just my thoughts. And from seeing a lot of this stuff over 20 plus years, it's pretty practical, but don't take my word for granted. Make sure you seek other advice before you do something. So one of the biggest things I want to really highlight is you all own business. 50% chance you are going to exit your business involuntarily. That is a crazy stat, and it's due to the 5 Ds: death, disability, divorce, dissolution, or disagreement. So you really want to make sure your exits are on your timelines, not someone else's. You'll see this again today, even though it's a short presentation. So if you're thinking about selling, what's one of the first things you need to do? Start making a list of 30 to 50 people, companies, and on the right-hand side, I have buyers categories. I'll go into that in a second, but you want 30 to 50 of those people, and why? Because all the different buyers do and value different things. You want to have competitive tension. And it's also, I've seen a lot of deals that the first person and sometimes the second person who was going to buy it backs out. So it's nice to have other options. And you never just really want to negotiate with one person because you have no alternatives. And then you're really kind of too much emotion put into the sale. So if you look at buyers categories, the 4 main ones are the strategic buyers. So whatever business you're in today, your competition buys you because it adds seats, it adds revenue, whatever. Financial buyers are the rich people that just sit there and go, hey, I've already bought 10 electricians companies. I'm going to buy some more because they have synergies. It all works with them. And they're all focused on getting more and more cash flow. Geographic expansion. I have one of these that came up recently is I have a Canadian company that operates out of Japan. They have some really cool IP, and I'm working with a Singaporean private equity group to buy them because these people like to buy the best of breed in a country, and then they'll take the 2 locations this person has and ramp them up to 500 to 1,000 locations within 4 or 5 years. So that's a geographic. They're not in the country. They're going to come in and expand. And capability buyers. I'm working with a client that can mix oil and water uniformly, which said it can't be done. So they can go to the Coca-Colas of the world and say, hey, I can put omega-3 into your Coke and have it evenly dispersed. So a Coca-Cola or a Pepsi or one of those great big companies, a Simrise or something, will buy them because they have some really cool IP. What are they buying, these buyers? They are looking at your future profits. No one really pays for the future profits. It's the reliability of those future profits. And again, I use the financial buyers on this page too. Is they are looking at the future profits, the cash flow predictability. When I sold my first software company, I got a minus 40% discounted cash flow. And that's why I was leaving, because I didn't believe in the sales and I didn't have control over the sales. So they hammered me on my cash flow. They said, hey, this is not really predictable year over year because it's not sticky. Again, I knew that because I was leaving the company and still had a successful exit. Strategic buyers, as I mentioned before, it's your competitors, your suppliers, your customers. So when you're trying to make a list of 30 to 50 people, it shouldn't take too long for all these people. And the three main drivers that a lot of people look at is, can you walk out of the business and does it work without you? I know here in Canada, a lot of people are really prideful of, I go into the office, I turn the lights on, and I turn the lights off at the end of the day. That is not a measuring stick that someone wants to come in and buy something. I looked at a company 2 years ago here, and it was producing, after taxes, the cash flow, everything, was about $750,000. I was like, yes, I could go buy this and have another 750K coming in. Two owners, each worked 12 to 16 hours a day, 50 plus employees. They were not organized. I did not want to buy a job, nor does anybody else. So that's the kind of things to start thinking about. Getting your recurring revenue, that's what people want to see. So it's not always a SaaS model. There's different models. We have people that build stuff, renovate stuff, and they've put together packages so they can get some recurring revenue. Monopoly control, do you own your space? I'm working on another startup right now in the pet wellness space, and I have a differentiator that nobody else has. So we should be first to market, and I'm hoping to get acquired. I'm not even incorporated yet, starting to sell, but I hope to get acquired next year if possible. So, but that's just, I understand how to build these things. Um, so if you do get a call, again, I take all the questions at the end because I think it's a little easier for me. If you do get a call from someone, this is something you should be really thinking about is, can they actually do this? Like, who are these people that are calling me? Because a lot of people dial for dollars and just say, hey, I'm trying to do this. I'm trying to buy something. I'm trying to buy something. And they have no idea what your stuff is. So don't get all elated and think this is amazing. It could be, but qualify. Can they do it? And then start asking the questions of, what are deals have they closed? Is it the right size for them? I know a guy that started a business. It's called Massage Addict here in Canada, and it was a subscription-based service for massages. And he sold with 50 locations. And I said to Harker, I'm like, why, man? Like, why would you ever sell? Because you were just going, it was on Dragon's Den. They did very well with that. They didn't want the money. They just went on for the exposure. And he goes, Kelsey, my ceiling complexity is 50. The next people coming in are going to take that from 50 to 500. Then they'll sell. And then there's another specialist that will come and take it from 500 to 2,500. So it's really understanding, like, what is your ceiling of complexity? Can they do these sizes? Because, if they're always looking at the big ones and you only have 50 locations or whatever, they're not the right fit. And the decision process, as you've done sales, who signs, who's responsible, what is the rigmarole to get that done? Red flags to watch: vagueness. Like, if they're creepy and vague, nope. If they've never done it before, nope. Fishing for information without, like, they're trying to get some stuff out of you without signing any paperwork, nope. And I can't stress this enough: do not skip steps. So on the very top here where it says qualify them with those wonderful questions. Protect your information. This is where you do not cheap out. You spend the money on the lawyer and make sure you have rock solid non-disclosure agreements. And that's where, like, this is not a Copilot or chat GTP thing. This is something you need to spend the money on because this is your livelihood. And then once you are in control, you can create some other alternatives, which I'll go into another slide, and decide who is the strategic. It's not always sometimes the person with the most amount of money that comes to the table. It's someone that's going to, hey, I'm going to keep your employees, I'm going to keep this going. What synergies are you looking for? So someone comes to say, I can sell your company and I want exclusivity. I do this. I have done this. It's very dangerous to do if someone approaches you, unless you put these guardrails on. Put short time frames. Say, hey, I'll let Ollie sell this for the next 30 to 45 days maximum. But what is he selling? What can you do? What can he do? Those are the kind of things you really need to think about. And you're checking in every week with milestones. Like, this is something, this is your baby. You're going to sell it. Make sure that if you're going to give someone some exclusivity to sell it, that you're not locked in. Because if you do that and you're locked in too long, they have all the power. So the biggest thing is like just short time frames, limit the scope, and you should be okay. So this is where I was saying weekly check-ins, those progress updates are mandatory. They cannot skip stuff because they have to be interested in your company as well. I say focused data requests. If you're only selling one division or you're selling one silo of what you're doing, they can't ask, I mean, they can, but you don't need to give them anything else for your company. So make sure the stuff is limited to what's actually going on. And they can't contact any of your suppliers or anybody else. You know, they're only dealing with the owner. They can't talk to your staff. They can't talk to anybody else because that starts spooking people. So again, for the guardrails, it's just making sure that it's just new information will change anything of that 30 to 45 day agreement you're going to put in place. And you have to really, really remember, like, your time is worth something. That's what I say. Like, the only thing you and I are equal in is time. So when you're giving up this time and you're giving up options, if you're given exclusivity, it's got to come with speed. Perfect example, I go into people, I know someone wants to buy a printing place from another province. I know someone else here. I'll go in and put an agreement in place and say, hey, if I get a letter of intent signed, I'm going to get a stipend. If I get the deal closed, I get another stipend of pay. But I put it on and say, it's only for this group of people. So the other person's free to go out and talk to other people that wants to sell their company. But for me is I'm locked in and say, hey, I'm very specific and I only want this little geographical area or I want these specific people. And that's generally fine with most people. So the biggest things you can do to maximize your outcomes is make sure your business, your finances, and your mindset. It's like, what are you going to do? Like Ollie said, he's exited before. I've done it 3 times. Like, what's next? Are you prepared for it? Because a lot of your identity is tied up into this business. And the next day, if you don't have lights to turn on or something to do, it's really sad. 76% of business owners regret selling their business within 1 year of selling. It's because they haven't thought what's next. So I'm going to skip this 90-day action plan because I have it again for your homework. Hint, hint. So again, top 3 value drivers. Can the business run without you? Is the recurring revenue there? Do you have monopoly control? And look at that. Why is this all important? Because 50% of exits are involuntary. So these are the 5 levers that you could try today to start optimizing. This stuff takes time. Start looking at all the risks. Start looking at your structure. Start looking at, hey, when will this happen? Especially if you're starting to sell, it's what are all the terms and conditions? I think at the very bottom it says, remember, a high price with bad terms can be worse than a lower price with great terms. This is something that there's a feel when you go through this with the other side. Is this good? Is it bad? What's going on? And as I said before, the highest price is not always the price you're going to take. It's the craziest thing to say, but I've seen it time and time again. It's all about fit. And just make sure that on the where it says parallel paths on the right hand side, I'll go to the next slide. So this is where I was saying with getting some competitive tension, you're going to go find those 30 to 50 people. That's great. Then you're going to knock that down to 5 to 8 qualified buyers. And that's going back through, do they have the decision making? Do they have the right deal structure? Do they have all the right things? And then you'll knock that down to 2 or 3 finalists. And the BAFO is the best and final offer, because you don't want to get in there like selling a house here in Canada. It's like, oh, this person put in 100 grand, that person put in 101, and then it's 102. It's like, no, 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 we're not playing a game show. So this is where this takes a lot of time. This is where a lot of experts are great at this. This is something I help like people out with as well. But this is where the information symmetry and parallel paths, you always want people going at the same time, kind of at the same speed, because if one or two of those finalists knock out for whatever reason, you don't have to start again. So never negotiate without options. Always have them, because these options create your leverage. So best and final offer process, I said from the 2 or 3 people, I think you know why options matters. You'll have all these slides too. I usually put only like 2 or 3 words on the slide, but I put a lot of stuff on the slide just so you would have some takeaways. Rollover, aka you sold your business. Your business is worth 20 million bucks. You own 100%. You've sold 50%. So you've got a bunch of money in your pocket, but you still own 50%, and a private equity firm or someone else owns the other half or more of your company. Now what? It gets really fun. Again, 5Ds, look through all those, because you have to negotiate all new terms. So this is where it's like, hey, do I want to, can this operator actually, do they have a track record of buying companies and expanding them? Is the growth strategy aligned with me? Sorry, I'm going to take a quick step back. Is the second bite of the apple means when you sell half and you keep half, you're going to do a second exit, sometimes a third or more exit in the same company. So the whole idea is if you sold it for, I think I said it was worth 20 million. You got 10 million because you sold half. The next time you sell it, you should be making more than 10 million, because the overall value of that company is going to be worth more and more and more. So your second bite should be worth more money in theory, if they're the right partner. So on the right hand side, I have all the key questions to ask. I'm just running short on time here, so I'm just gonna, you'll have that. And this is how you protect it. Make sure you governance rights. Again, this is where you have to spend money on lawyers. Make sure you know what the reporting is, what you want, what they want, so there's no arguments. So, and then just make sure you understand the liquidity of how events happen, how you get your money out, how they get money out. If there's a cash call because there's a cash shortage, do you have to come up with cash? So again, there's some governance checklists and some more protections on the back end. There's some good terms there, like tag along, put along, drag along. Like, these are all fun things to put in if you really understand them. They've protected me more than once. So I always like to say a little bit, like, how can you do something that doesn't cost you money? It's going to cost you a little bit of time. So here's your next 30 days. Like, you have a KPI, you have these numbers. Start documenting them. Map your process. That number 2, showing your business how it can run without you. Almost every buyer needs to see that. Because again, they do not want to buy a job, they want to buy cash flow. And try to find something to create. If you don't have recurring revenue, try to find some little small thing. It's out there. I've seen almost every single business be able to do it. And thank you. If you have any questions, that's my my calendar link right there. You can just go on there, book an appointment. I have no problem going through any of this with you. Hopefully that made some sense. And thank you. I will stop sharing now, if it lets me.
Kelsey, big thank you. That's fantastic. I'm going to contact you next week about a particular opportunity we've got here in London, and it'd be good if we can book a call on that. Any questions for Kelsey this morning? I mean, it's something that will hopefully affect you guys going forward in your business, and it's something you need to really plan for and think about, as Kelsey's highlighted this morning.
I've got a question, Ollie.
Go on, Rebecca.
Kelsey, I'm 18 months into my business. I've just gone from side hustle to full time, so I'm very early on in the stages of obviously growing a business. But just in terms of exit, is there much in the way of cash required in terms of the due diligence side of things, the accounts that you need to prepare? Like, what sort of monetary amount are we talking in terms of kind of getting that getting your business ready for exiting?
It depends. It's like the ultimate finance answer. It
Yeah.
depends. How big's your company? How small is your company? Like, are you a large grocery store that has 18 locations? Your due diligence is going to be more. If you're a smaller
Mhm.
company, it's just if all your records are kept correctly, like this is where, we have a book, like in Canada, there's a bookkeeper and there's an accountant. The bookkeeper just puts all the things in the right spots. The accountant
Mhm.
gives you strategy. So due diligence shouldn't take much. It's just your organization. If you're organized, because what's going to happen is someone's going to say, okay, Rebecca, I like this. We have a great chat. We sign some non-disclosure agreements. And then I start asking for the financials. I start asking for the customer list. I start asking her for suppliers list. And if anybody's over 15%, like if one customer is 15% or more of revenue, not buying it.
Mhm.
Big
Yeah.
risk. You only have one supplier. I have someone here, 37 years, the same business, amazing business, killing it. One supplier for their caulking.
Hmm.
And guess what? That place decided we're not going to make that caulking anymore.
Yeah, right.
So those are the kind of things that, due diligence is timely.
Hmm.
It's making, if you have a good non-disclosure agreement, that would be the thing you would have to invest in. And I would have a data room, which could just be a little Google or Dropbox or whatever for now. But when someone calls Rebecca and says, "Hey, I'm thinking of your buying your business," and you qualify them and then say, "Yeah, I'll sign up for my non-disclosure, and you can have access to my data room," that will freak someone out on the other side, going, "I'm going to have to pay a lot more money for this because she's organized." It gives
Hmm.
that illusion. So hopefully that helps, and this you can
Yeah,
chat
no,
with
it definitely does.
kelsey.com and we can go through a specific example. Like that's all free. I have no problem. I love helping people.
Thank you. Thanks so much.
Yeah, I've got a
Thanks,
quick
Rebecca.
question, Kelsey. In terms of qualification of a potential buyer, are there standard questions or is there anything you would ask for? Is there a standard pack of information? How do I know someone's approaching me if they're genuine? Are there sort of half a dozen questions, information I can ask
Are,
for, which would
are
very
you
quickly rule
married,
that in
Nick?
or out?
Are you married?
No longer.
Okay. So that's like a business. It's the kind of like that dating part. That's what questions you want to ask them, because if you're sticking around, you want to make sure you can work with them. If you're not sticking around, you don't care about your employees and you're just trying to maximize your money, then you're going to ask less questions. It's just the main questions of, can you work with people? Have they done it before? Um, and just that feel, like there's a real feel to it, and that's why I just say it's a lot like dating or marriage or anything else like that. It's uh sometimes people fool you. You get through and then all of a sudden it's like it's not what, you get married and it's not what you thought it was. We see that all the time in business. People put on their best fronts because they're dating during this. That's what I equate it to. It's like dating, and you're going back and forth. Are you happy? So it's just really trying to understand them, their motivation, and track records. Like those are the biggest thing. Um, and talking to other people that they've bought out, because they're like, "Hey, Nick, at the 8 month mark, they tried to screw you over with this." Like those are the kind of things that I don't know why people won't take the time. Nick won't pick up the call and make the 15-minute call to someone else. Like you should. You have to, because these are all the kind of things on the due diligence side. It's like the private investigator, they're going through who's the CEO, what are they doing? Is there any skeletons in their closet? Now, if you were a great big monster, I don't know if you are, but if you were a big enterprise, that's what you would be doing. Hopefully that helps somewhat. And again, you can reach out and I can go through more specific examples with you and give you some questions if that's what you're thinking.
I just want to add something to that, if I may, Kelsey. If we sold to a big corporate buyer, and what became very clear from the beginning is that every time they wanted to meet us face to face, they would call us into their big corporate offices, which were quite intimidating. And it was like we were going to an away game, if you like. So what we did, we got an advisor in, a very good advisor, corporate finance advisor, and he said, now from now on we're going to do neutral meetings. So we're going to be in a place where you can go to, you both feel familiar with it, me and my business partner, and that really did work, because that is part of their tactic. You know, they want you to feel on the back foot. They want you to feel intimidation and all of that. So that was a really, really key point. So, yeah, I mean, if you ever get to that stage, speak to certainly myself and Kelsey, because there's so much to go through. And these guys, what you got to remember, you might only do it once or twice or 4 or 5 times in a lifetime. These guys are doing trade 10, 15 deals a year, some of these buyers. So,
and they're looking at 500 plus deals a year to
that's
go
right.
through. So
that's right. So, you know, that's completion deals. So yeah, you're quite right. They're 5x that.
And another fun stat, only 30% of businesses that go to market sell. So this is why, like, I'm a certified exit planning advisor. What does that mean? I'm a value advisor. You work on revenue, I work on value, because they're not the same. Does that make sense? Because value, do you have your S&P, like your standard operating procedures? Are they all done? Is Rebecca turning the lights on? No. Like, can this function without Nick? Yes. Okay, perfect. Like, these are the good things. Like, those are the, so value, value, value.
On that note, Kelsey and Siram, it's not just about exit. My question is more relevant to, let's say, I'm not aiming to exit in near future, but point is, I would need, let's say, a strategic investor or a partner on board to scale the business up. So in that case, do the principles still apply? Means how you actually negotiate value with, because it's not more about revenue, it's more about capability and uh, what you are projecting to achieve should there be an investment on board. So
So
how you deal with that situation?
it's trying to find, like, it's like the slide I had on strategic buyers. It's the same
Mhm.
thing. Like, you want someone to come in that's different than you, because if you're both the same, I say you're both yes men and one is redundant.
Yeah.
So you want someone that's got a similar skill set but something totally different. You know, what are they bringing to the table? Are they bringing sales? Are they bringing a back end? Are they bringing compliance? Like, that's the kind of what are they bringing to the table? And it's the same as the dating analogy again. It's, can you work with it? Because if you're going to give up a piece of your baby, you're now stuck with these people. And
Yeah.
as soon as you take money, this is the thing that people don't talk about enough. As soon as you take money on from someone else,
Mhm.
you're almost like an employee to a certain degree, because there's a whole new standard. There's someone else looking over your shoulders, there's more people asking questions, which is
Mm.
fine if they're the right partner and can get you to that next level. I
Yeah.
have no problem talking with you afterwards too, to give you some more thought
Mhm.
process into that. But it's, if you know what level you're trying to get to, what you're trying to accomplish, start making that list of who can get you there, and start that approach.
I appreciate that. Thanks, Kelsey.
No worries.
I'll
Thanks,
reach out
Bowen.
to you. Yeah.
Peter, did you have your hand up?
I did, but it's been answered now. Thank you. Thanks, Ollie.
You're welcome.
But to Kelsey, you know, it's a good presentation. Thank you. Really interested, even though I'm at an early stage. But you've highlighted all the pitfalls that actually probably need to watch out for earlier on in the business before you get to the end, so that everything's more prepared for it, as you pointed out.
Yes, Peter. Like, this is the stuff that, I've got my startup, and this, like, I already know what my exit number is. I already know what we want to take a second bite of the apple is. Like, these are the things that take all these things, start your little data room, get those documents. It's just having things organized. The more organized you are, like, think if you want to buy something or go something, if you go to a store and it's unorganized, you don't want to go there. It's chaos. So
I
go
think
have
it's
your
also
business like that.
important. I think it's also important when you're looking for investors, because some investors want you to sell out after 5 years or whatever, and looking to exit you out of the company so they can take over. Others aren't so bothered, and I think that's certainly important at my stage, that to get the right investors for the exit that I want out of it.
And if you don't have to take investors, I've done this. I've done 3 exits. I'll do a 4th, then 5th too, because I have another company. But my goal is not to take investors. I'm not saying it's the thing for everybody, but I believe in sales. I believe that if I get enough orders, that if I need $1 million to go and make those orders, I don't need to take equity. I can go to a bank. I can go to someone else and maybe pay another point or two, but I won't have to give up equity because those pieces of paper are worth more. But that's just my own personal. I find there's a big thing. Oh, this person's raised all this money and all this money. I'm like, hey, that's fine. That works for a lot of people, and there's the time and place for it. But I really enjoy the trying to keep as much equity and control as possible.
I think that's a good aim. Unfortunately, my project's probably going to need somewhere near $100 million to develop it before you can have sales.
Well, you get the sales, and then you go develop it. You get someone to do a letter of intent. If Peter builds this, X will pay. That's all I'm doing. And if it's $100 or $100 million, like $100 million probably seems like a lot of money to you. It's a lot of money to me too, but to other people, it's not. I was supposed to meet someone here from Toronto, which is halfway across the country. They were coming here. Their minimum checks is $150 million. Is their minimum check to go into a company? So
have you got a recommendation for me?
They're Canadian companies only. But that's the kind of stuff. But let's have a chat afterwards, because I know people over your way too. And if it makes sense, there could be someone over there, because there's always money for good deals.
Okay, thank you.
Anyone else?
Well, when you use the word deal, that reminds me of Trump, actually. Nowadays, this word deal is going around quite commonly.
Sorry, you cut out. I missed
And
the
I
first
was
part.
just joking that, when you use the word deal, that reminded me of Trump calling everything as a deal now.
Okay, pass. Next question. We don't talk about him.
I know. I can feel.
Any final questions for Kelsey, guys?
No, I would go back to chatwithkelsey.com if anybody wants to have just a complimentary session, just to see if I can help out anybody or make a connection for anybody. I haven't been in the UK since September because I was over for the Rugby World Cup finals for the ladies, but I don't know when the next trip over is, but there's a daytime flight here. It's like 5 hours, so it's not a real thing to get to the UK. So if someone needs more, then
well, you've been fabulous this morning, particularly that we've been bad enough to get you up at 5 o'clock in the morning, and you've performed wonderfully. So big thank you. You're welcome back anytime. The next few days, you're going to get a lot of big ups and shout outs and the rest of it on LinkedIn. So get ready for that from the community. And welcome back anytime, Kelsey. It's been really good having you on this morning.
Well, thank you.
Thank you.
Everybody enjoy their day. And as I said, it's chatwithkelsey.com. Please get a hold of me. And as I said, I'd love to go through your situation and see if we can help you out. And Ollie, you'll reach out to me for something for next week then too?
Yeah, I'll email you on Monday.
Perfect. Thanks, everyone. Have a wonderful weekend.